Still don't think it's difficult to start. What's difficult is running a business in Ethiopia. Getting your licenses and stuff is pretty straightforward. I think there are more challenges in the day-to-day running. The one thing that's been consistent is we don't lack talent, but we lack opportunities to gain experience. Is the solution you're selecting or the way you designed your solution to work, is it going to serve the country's needs?
What do you recommend these entrepreneurs setting up these startup tech companies to strengthen their business and to make their companies investable?
That's a really good question.
Today's guest is Adam Abate, a technology leader, an entrepreneur and investor with over 2 decades of experience applying technology to solve current and pressing challenges in developing countries. After moving back from New York nearly 20 years ago, Adam has co-founded Apposit, a technology company behind impactful systems like Ethiopia's commodities exchange platform and digital agricultural tools. He also led the development of Ethiopia's nationwide financial management system as Director of Technology for the Kennedy School at Harvard. Currently, Adam works at Trini Capital as an investment management director, backing Africa's most promising technology companies and shaping the continent's private sector future. Thank you for coming, Adam.
Thank you. Thank you for having me.
I would like to start our discussion with your first engagement that you were part of after coming from New York. In 2010, the Ministry of Finance adopted an integrated financial management information system, IFMIS, to enhance efficiency and accountability in the public financial management. IFMIS has automated basic financial services such as budgeting, accounting, and expenditure tracking. Back then, it was you and your team that developed and deployed this financial system in Ethiopia. Could you tell us more about the important benefits that IFMIS has introduced to government institutions in terms of transparency and making the government and the public financial system more efficient?
There's a lot of questions in there. And it's been quite a while, but IFMIS is, I think, a generic term, right? Integrated Financial Management Information Systems. So it's really just the automation of financial management functions. And there's many different solutions that can be presented within that context. So within the Ethiopian context, and this is 22 or 23 years ago now, this was really the modernization of Ethiopia's public financial management system as a whole. And as part of that, automation was also introduced. So for any, I think, modern system of any kind, there needs to be some sort of automation. In fact, that sounds a little bit old-fashioned now. You would expect now there also to be artificial intelligence thrown in there. But automation is kind of what you would call table stakes. Like it just has to happen. So this was part of a broader modernization of the Ethiopian public financial management system. And as part of that, I was leading the automation aspect of it. And it takes many forms. Ours was interesting for me at the time because there was this question, should we build it ourselves or should we just go out and buy something off the shelf, as they say, right? There's many recognized, large-scale, very kind of well-known IFMISs, if you will, provided by providers such as Oracle, SAP, any of the big software companies in the world, right? So at the time, there was this debate, frankly, should we buy off the shelf or should we develop it ourselves? When I joined the project at the Ministry of Finance, there was already a locally built system in place. So kind of version 1.0, if you will. And my first engagement was actually to make an assessment of that system and just advise the project on what might be improved and so forth. So that's how I started it. Eventually, we stuck with the decision to build it ourselves, meaning build it locally here in Ethiopia, a custom solution for what the Ministry of Finance needed. If you were to make the same decision now, it may go a different way. In fact, I think 4 or 5 years later, after I started that project, the government did procure, I think it was an Oracle solution, if I'm not mistaken, that was rolled out to various government ministries. I mean, in a way, it's not the core topic, whether you built it yourself or whether you procured it. At the end of the day, is does it do what it's intended to do, which is make public financial management, as you said, more transparent, more efficient, and basically fit for purpose. Now, in the Ethiopian context, there are different dimensions to fit for context. Like, does it work for Ethiopia? That's really the interesting question. And so, working for Ethiopia in our context meant it's nationwide, and as you know, Ethiopia is a very large country. Financial management is devolved down to the Warada level in many instances, at least it was at the time. So you're talking about 600-700 locations, often maybe even not connected to the internet, possibly very remote. So the question becomes, is the solution you're selecting or the way you've designed your solution to work, is it going to serve the country's needs, which is manage at a Warada level, aggregate up, and have almost, ideally, real-time financial information for the government to manage and make decisions based upon. So that was the context.
Yeah. So I can understand managing and deploying such kind of large scale and complex project, which will be applicable in more than 700 or more government entities, would be very much challenging. How did you approach it, managing such a large scale project? And what were the major challenges in applying those projects? Of course, you've mentioned some of course, but I would like to hear more about the challenge and what lessons have you taken from managing this kind of large-scale project.
Yeah. That's interesting. I was also at a different stage in my life. I was 20 something years, 23 years younger. And I think when you're younger,
Everything is possible.
everything is possible. Yeah. And it's amazing. That's actually an amazing feeling where you see the possibilities and not necessarily the obstacles. And yeah, I try very much to be the same way even today, although after 23 years, you see many obstacles in your path. But look, for me, at the time, it was all about design. And I keep coming back to this, fit for purpose for Ethiopia. Is what you design going to work in the Ethiopian context? And working is, you define what working means. Or at the time, the Ministry of Finance would define what working means. And so it says the system has to do this, 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 and this. Or rather, what I want is to be able to do this, 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 and this. And as a technical person, as a designer, and this is applicable in any context, whether it's the Ministry of Finance or anything really, as a designer, you have to design to meet those needs. So I think that was the biggest challenge. And I remember one of the, there was a couple of key decisions. One was, if you know software, there used to be what are called the desktop applications, where you install software on a computer. This is 2003, around about 2003, right? So software to a large extent used to still be installed, at least in Ethiopia, on desktop computers. Whether it's, what do they call it here? They use Peachtree, like everybody walks around. They install Peachtree on a computer. Microsoft Word, Excel, PowerPoint, all that stuff used to be installed on your computer, all right? And what we were saying is, because you're not just thinking about how the software works, you have to also think about how you're going to support it, because inevitably you're going to need to provide support. So we asked ourselves the question, if we had to install software on 700, maybe if there's 2 computers in each location, 1,400 locations across Ethiopia, how are you possibly going to support that, right? So one key decision was, do we build this to work on the internet? Whether it's public internet or a private internet, work through a web browser. Because if you work through a web browser, you're only supporting one server. I'm simplifying, but you're only supporting one location where you have to install and update and so forth. And it made a lot of sense. So that's what we did. That's a big decision. This was at a time when, for most people, internet in Ethiopia was accessed through a dial-up modem, if you remember that old school access, right? So to build a public financial management information system running on the internet at that time was a bit out there, if you will. It was a bit of a risk, but it made a lot of technical sense. And as we talk, maybe you'll hear this from me repeatedly. It's the future. It was the future. So that was one big decision we made. I think the other big decision we made was how deep to take your automation. Meaning, are you going to try to automate all the way down to the warada? Or could you maybe automate less, maybe down to the zone, and do the rest manually, right? And this is just being pragmatic. Like, we're not doing technology for technology's sake. Again, you want to achieve your objective. So we decided, okay, let's not automate all the way down. Let them do it manually there. There's give and take, right? You're not going to get real-time information on a daily basis, but you can get it maybe on a weekly basis. And is that okay? Given the trade-off. The trade-off is the complexity of trying to install and run software at those types of applications. So those are a couple of the decisions. I would say the toughest decisions was around design. And then once you believed in that, it was a question of execution.
So you think the project was successful?
I know the project was successful. It was successful. Yeah.
So now, 20 years after that, we're seeing different e-governance activities from the government, including the FIDA. How do you see the implementation and the relevance of this kind of e-governance systems? And also, how do you appraise those systems? How do you think they would be beneficial for the society at this stage, and even for the government entities?
Sure. So I am not going to claim to be an expert in either of those two, but I have an opinion. Broadly speaking, especially in a country like Ethiopia, where the government plays a significant role in everybody's life, in the economy, socially, government is an important player. So for the government to take the lead in digitizing services, experimenting, showing people at large what can be done with technology, I think is really important. So I think it's very commendable that the government itself, as we say in our industry, eating its own dog food, meaning doing what it's encouraging other people to do. So if you're a software company and you're selling a product, do you use that software product yourself? That's eating your own dog food, as they say. So I think it sets a very good example, and it's experimentation. Like I really believe in experimentation, seeing what works, what doesn't, learning quickly, and iterating, slowly improving over that. So broadly speaking, I think the fact that the government has invested heavily, kind of outwardly as a policy, saying it's moving towards automation is really important. I think there have been mistakes made along the way, but it's in the right direction. FIDA, again, and I tried to get my FIDA card the other day. I have to admit, I haven't gotten it yet. I went to a few places and they had stopped doing it. That is a really important building blocks for so many things, but particularly the digital economy. A trusted identity is critical. It's a piece of what you would call public infrastructure for digitization. So it's really important. I can't understate that. And the fact that they've gotten this far, the fact that it seems to be rolled out sensibly and gradually, and they've made it really easy for people to go get their FIDA cards. I think it's just a critical component of any digital economy, period. Yeah.
Thank you. So I'm going to take you now to Apposit. building technology for Africa. My first question, of course, would be what inspired you to establish Apposit and the different applying the global technologies and together with the development challenges that Africa has, especially in terms of implementing technologies and applying the different systems that Apposit was trying to implement in the country. What inspired you really, and how was the impact?
Again, taking me back 23 years when you're younger, you don't think as deeply or as long about things. But it's clear. I mean, what inspired me was the experience at the Ministry of Finance. And first of all, we were successful in what we did. It was large scale, it was impactful, and kind of it was built for Ethiopia. I said before, Ethiopia didn't need a Mercedes, it needed a Toyota, and we built a Toyota. So that inspired us. And what Apposit, even the word Apposit doesn't mean anything, but it comes from the English word apposit with an E at the end, which means suitable or appropriate. And so we based on that experience, we felt there is a need to build appropriate technology in Africa. And that was it. So that's how we started Apposit.
So, how was the licensing procedure? After many years now, me as a lawyer, there are different new legislations. Even the digital finance sector has been transformed enormously, starting from the policy document. We have different legislations. We are having now different companies engaged in this sector. So, how do you see the current situation, the current developments, and also how was the process at that time, the licensing procedures, the regulatory frameworks, the operation? How did you find all these procedures and the operational opportunities and, of course, the challenges as well?
Yeah. I don't recall it being that difficult. I still don't think it's difficult to start. What's difficult is running a business in Ethiopia. Right? Getting your licenses and stuff is pretty straightforward. I think there are more challenges in the day-to-day running of your business. So I don't remember it as being particularly challenging, although there was some ambiguity and lack of clarity. So I remember halfway through Apposit's kind of life in Ethiopia, we changed its legal structure from what at the time was a branch office of a foreign entity to a local PLC. So there was some ambiguity. Where do we fit in? Like, I think we had a license as a software development firm. But I don't really recall the licensing process being arduous or difficult at the time. It's more, again, running your business. Yeah, that's my general impression. We started off more as a software consultancy, so we were building software for other people, just like we did at the. And then we evolved more into products, eventually kind of settling on two main areas, actually three main areas. One was agriculture, so a digital agriculture platform. The second was kind of a private sector, Ethiopia private sector focused FMCG, Salesforce automation. And then really what formed most of our identity and most of the work we did was in the financial services, where we worked with a company out of Nigeria. At the time, it was a young startup called Paga, building their platform for them. And over the course of that in Ethiopia, over the course of a number of years, at least 7 or 8 years, we looked at trying to do the same thing in Ethiopia. And by the same thing, I mean providing digital financial services. So it was only until much later, really, that we needed to start working with financial institutions in Ethiopia, particularly after we sold our company to Paga and we wanted to launch in earnest digital financial services in Ethiopia. That's where we sought partnerships with the bank. Mind you, there was a time where we looked at launching digital financial services, And frankly, we were a little ahead of its time. The timing wasn't right. It was a time when digital financial services were not necessarily recognized as an area that private sector outside of the banks could participate. So, and it was a bank-led model. The regulation said, if you want to provide digital financial services, you basically have to be a bank. And companies like ours were relegated to being service providers to banks. So we had looked at it then, and we decided regulation is not conducive, so we dropped it. Anyway, many years later, when regulation did change, that's when we started talking to and developing relationships with banks.
Thank you, Adam. Ethiopia has opened its financial sector to the participation of technology service providers, allowing them to offer digital infrastructure and platforms that support banks in delivering efficient technology-driven services. This development has also included the introduction of payment instrument issuers to create channels for financial access innovation. The sector has been liberalized to permit foreign participation as well. These changes were made possible through key legislative reforms, particularly the National Payment Systems Proclamation and the directives issued by the National Bank of Ethiopia. These legislations provided a legal framework for licensing, supervision, and operations of these financial actors. How do you assess the role of the recent directives issued by the central bank in the digital finance sector in creating level playing field for non-bank actors? And what's expected from the business community once a more conducive regulatory environment is established?
I think the current regulations, when they came out initially, were well considered, well consulted. They weren't ideal for us, and I'll get to why that was. But like you said, it's very clear. And it opened up the sector to competition outside of banks, right? So it allowed other private actors, fintechs, or as the legislation calls them, digital financial service providers, to participate. And this was really significant because it opened up that sector to non-bank players, which are very different in nature to banks, right? They're new, they're startups, they're more agile, they're more focused, they're less burdened perhaps with stringent banking regulations and are now governed by this subset of digital financial services. So yeah, over the course of when they were developed and eventually released, I thought they were very clear to the extent that I believed, okay, the government has done everything that it needs to do for now, and the rest is up to us. Us as, players in the sector, it really is up to us now to execute and, iterate on the next revisions of the sector. Develop businesses, put products out in the market, see what's working, what's not, go back to the regulator, improve this, It was not, the ball was now in our court. Now, for a company like Paga, which is a foreign owned, it was still very difficult to participate because foreign ownership in financial sector was still not yet allowed. There was one opportunity as a payment gateway provider where we could work with a bank, in partnership with a bank. So we weren't the regulated entity, but the bank would be, and we were allowed to have a partnership. That's the avenue that we explored. But it was limited to being a payment gateway provider, which for us at the time was sufficient for market entry into Ethiopia.
But the operations in general and the arrangement in the agreement that you had with the financial institutions will still be approved by the National Bank and will still be regulated on a regular basis by the regulator.
That's correct. But what they're regulating is the Bank of Abyssinia, not us. Yeah. And yeah, we had gotten that approval. We worked out the internal agreements with Bank of Abyssinia. There's various agreements such as what is called BIN sponsorship, for us to be able to accept credit cards or be part of the Visa, MasterCard, and other card networks. There was other, merchant acquisition considerations that we had an agreement with Bank of Abyssinia. But at the end of the day, National Bank approved Bank of Abyssinia to work with Paga.
Compared to the traditional banks, the involvement of fintech companies in the Ethiopian financial sector is still in its developmental stage. To expand the digital financial environment, much is still expected from all actors, be it policymakers or investors, to bring about a cohesive implementation of the legislations. What advice would you offer to businesses that are interested in entering the fintech sector but remain hesitant? And what guidance would you give to those already operating in the sector?
I'm a firm believer in constant iteration and improvements, so small improvements. I would much rather start something today that you're embarrassed about and improve it 10 times this year than spend a year trying to design something and get it perfect and then only start a year later. So I'm a big believer in constant improvements. So once the foundation in terms of, say, regulation has been set, so a general framework, and you understand payment instrument issuers, payment service operators, and so forth. So once that general framework and the legal framework is set up, best thing to do is just work, figure out what's working. Digital service providers, investors, startups, they should experiment, get products out there, see what works, what doesn't work, where your problems are, and then just have a constant communication with the regulators and all the other stakeholders and improve a little bit at a time and do it rapidly. Don't, spend, years debating about a particular thing. Experiment it. And this is where the sandbox is really important. I mean, that's really what the purpose of the sandbox is to, instead of trying to predict everything that happened, experiment, see practically what happens, and then adjust your regulation and in a safe environment, right? So the regulatory sandbox, which wasn't there when we were trying to launch our product with Paga, but I believe now is, I think it's a really important component of the ecosystem to iterate rapidly and continually improve everything for everybody in the sector, right? Between regulators, stakeholders, entrepreneurs, and so forth.
Great, thank you. You've been providing support to the startup tech companies, and you've been supporting the private sector growth at Renew Capital. What are the major criteria to identify the potential projects, and how do you evaluate the impact so far from the different projects that you've supported to date?
Okay, so a little bit about Renew Capital. Renew Capital is a venture capital firm, a Pan-African venture capital firm. We make investments in early stage companies. In investment speak, we call it the pre-seed and the seed stage. So, in the evolution of a high growth company, they may initially start with their own capital, then raise money from friends and family, and then go out to the market and raise what might be called institutional capital, so such as venture capital. So we're at that early stage. We look for companies that have already a product in the market. We don't invest at the idea stage, but we want to be among the first institutional investors in those companies. So, and we work Pan-African. We invest in what we call tech-enabled asset-light businesses. So there needs to be a big tech component. By comparison, we wouldn't invest, say, in manufacturing or big capital expenditure companies. And in terms of sector, we're fairly sector agnostic. So we look at companies in any sector, frankly. So that's the venture capital arm. Now, working in Africa in general, and probably particularly in Ethiopia, there's still a lot of work that needs to be done more broadly on the ecosystem to develop young entrepreneurs and young businesses to make them investable. Not all businesses are investable, nor should they be. You may start a business that can be very successful, but may not be right for external investors such as venture capitalists, right? Who are by definition require that business to be high growth, because our business model is based on many multiple time returns on our investment. So many of the investments will fail, a few will make it, and the few that make it provide outsized returns on our investment. That's the general business model. So there's a lot of work you have to do in developing an ecosystem to create investable companies. So the other big part of the work that Renew Capital does across Africa and has done for many years in Ethiopia is developing the ecosystem. So this work will be identifying young startups and supporting them, trying to help them learn about investments and high growth companies, helping them make a decision if that's the direction they want to take, providing some business advice, whether it's finance, operation, leadership, and so forth. So we do a lot of trainings, we provide a lot of technical support, we do a lot of networking to get different people in the ecosystem together and so forth. And the idea is, we help develop the ecosystem, but we also help develop companies that us, as well as other investment firms, can then invest in. So that's broadly the work that Renew does. There's been a lot of, it's challenging. I don't think one or two or three companies can change an ecosystem. There's so many stakeholders, and it all needs to come together, and it takes time, right? Nurturing talent is a long game, and it takes time. So we've had multiple successes. To be honest with you, success for a venture capital firm is what you might call an exit, or one company just making it, right? Yeah. And that's not just for us, also for Ethiopia. Like, these things build on each other. Ethiopia needs success stories for so many reasons: to attract more capital, to encourage young entrepreneurs, to show young entrepreneurs that, look, if you do it this way, there's potential. I don't think young entrepreneurs have a myriad of good role models or good success stories to aspire towards. So it's just so beneficial for 1, 2, 3, if you're lucky, just huge success stories to come out of Ethiopia. And there are some, right? I think the ride-hailing apps, not just Ride itself, but the others, I don't know if there's others, but at least one other, right? I think they've scaled. They're providing significant value. I think they're very big and successful businesses by the Ethiopian context, perhaps not globally yet. So those are success stories, right? So it's possible. And we keep hearing of more and more of these, a few of them that are making it, right? And I think that story is really important.
Adam, tech startups and entrepreneurs require capital to develop their products and build infrastructure. To attract this funding, they must present a compelling business case, which is supported by a functional prototype, a clear revenue model, and evidence of market demand. Equally important is their ability to maintain transparent financials and ensure regulatory compliance. All of this build investor confidence and improve their chance of securing capital from angel investors and venture capitalists. Could you please tell us more about what criteria companies must meet to become investable, and how does being tech-enabled enhance their attractiveness to investors?
A couple of things, and this is not going to surprise you, right? You need to be solving an important problem, right? We like to say, is it an aspirin or is it a vitamin? If you're in pain, like, the only thing you can think about is taking an aspirin or whatever, like Tylenol or ibuprofen or something, to make your pain go away. Like, it's really valuable for you to solve that problem. If it's a vitamin, it's nice to have, and maybe you will buy it, but it's not like bothering you every day. It's not something that you're going to spend as much money on as you would say an aspirin. So the type of problem has to be painful, for lack of a better word. That's one. It needs to be in a large enough market, right? Like, it needs to be serving a large enough market that you're gonna become a big business. right? Or you have the potential to become a big business. In other words, you have a large addressable market. And then maybe thirdly, I would say the entrepreneur themselves needs to have this really large vision, and they need to be what we call a high growth or a growth CEO. They want to take their company from a small thing to a pan-African global company. And not all people want to do that, which is totally fine. But like I said, for venture capital type returns, we have to be investing in businesses and founders that have that vision. Not just necessarily pan-African, it could even be global, right? There's no reason why African companies can't go global, right? Yeah, and then as I mentioned, different investors have different theses, as they call them, different hypotheses about what businesses they want to invest in. So we have determined that we want to be investing in the tech sector. And like I said, we're agnostic of which sector. It could be agriculture, education, fintech, etc. But it definitely needs to be tech enabled. Why tech enabled? A couple of reasons. The primary one is probably that it's very scalable. Like your marginal cost of growing that business is low. Broadly speaking, startup founders are not experienced in engaging and raising money from foreign investors. That's one. Again, it's quite broad. There's a lot of nuances and details to that, but that's one general comment about Ethiopian startups. And then you also have to you just need experience in what is a good startup? What does it take to run a high growth business? You just have to, be experienced. And, in my 23 years in Ethiopia, the one thing that's been consistent is we don't lack talent, but we lack opportunities to gain experience. When we were building software that is world-class, there was no lack of talent, but there was lack of experienced talent. It doesn't matter which of the best schools you came out, you lacked the experience of working on world-class software systems. So I think it's a similar thing, but it'll come. It'll come. And we have, just Apposit with our alumni, if you will, they're now working across the world, be it Google, be it Amazon, be it, having been recruited to go work in the Netherlands and Germany and so forth. That experience will come. We don't lack the talent. We just lack the experience and the opportunities to get that experience.
I agree, Adam. The private equity financing venture capitals enable entrepreneurs to grow rapidly and expand to new markets beyond what traditional financing allows. But in return, investors expect higher returns on their investments through significant equity growth. So, in order to access that finance, startups would need to satisfy the criteria you've mentioned just now. How would you characterize this type of financial assistance? Is it more of a support mechanism, or should it be considered as an investment? And out of every 100 companies, how many companies would generally meet the requirements you've outlined?
So I run the venture capital arm for Renew Capital, and I know the percentages. So roughly, we would invest in less than 3% of the companies that we look at, and maybe even closer to between 2 and 1% eventually, right? So it is very selective, but there's also a lot of companies that are not investment ready. Ethiopian entrepreneurs are not yet experienced enough in raising the type of investment that we provide. It's not common for Ethiopian companies to get foreign investment for various reasons. It could be regulatory, it could be cultural, and so forth. So, when founders go out to raise money, they have to have a strategy. Why are they raising money? If you were to ask me, if you go out to raise external finance, like significant external finance, you have to be a high growth company expecting to be worth, $50, $100 million and so forth in the next 3 to 5 years. So that's not common in Ethiopia. And sometimes to reach that, you need to work in multiple African countries. So I think Ethiopians, we have in the past been quite insular in the sense that we're just looking at doing business in Ethiopia. And you can still build really big businesses in Ethiopia. But it's only until recently, I think, in my experience, that Ethiopian entrepreneurs are looking more regionally to expand their businesses. But broadly speaking, startup founders are not experienced in engaging and raising money from foreign investors. That's one. Again, it's quite broad. There's a lot of nuances and details to that, but that's one general comment about Ethiopian startups. And then you also have to you just need experience in what is a good startup? What does it take to run a high growth business? You just have to, be experienced. And, in my 23 years in Ethiopia, the one thing that's been consistent is we don't lack talent, but we lack opportunities to gain experience. When we were building software that is world class, there was no lack of talent, but there was lack of experienced talent. It doesn't matter which of the best schools you came out, you lacked the experience of working on world class software systems. So I think it's a similar thing, but it'll come. It'll come. And we have, just Apposit with our alumni, if you will, they're now working across the world, be it Google, be it Amazon, be it, having been recruited to go work in the Netherlands and Germany and so forth. That experience will come. We don't lack the talent. We just lack the experience and the opportunities to get that experience.
Venture capitalists are essential for fueling startup growth and innovation. But venture capital activity in Ethiopia is still very limited. This is partly due to the absence of a well structured legislative and regulatory framework designed to accommodate and support such institutions. We know that many venture capital firms that do engage with the Ethiopian market often operate informally or through loosely structured commercial representative offices without even establishing a substantive local presence, unlike what we've seen in a more mature ecosystems abroad. Given this context, what policy and institutional reforms would you recommend to attract the presence of venture capital institutions in Ethiopia? And what do you believe are the key challenges or deterrents that have kept many of these firms from showing sustained interest in the Ethiopian market?
Good question. Again, I think so. In my position, I have a pretty broad view across Africa. So we invest in about 14 countries, and I see the differences between countries. There's differences in the startups. There's differences in how easy it is to get things done. And Ethiopia is a little lagging. Venture capital or investment capital, broadly speaking, will go to where it's easiest to make your return and perhaps less risky. And frankly, there are easier places to invest than Ethiopia for various reasons. But slowly these obstacles are being removed. For example, one of the big questions was, how do I get my money out of Ethiopia? How do I not just repatriate profits, but how do I get an exit? Mm-hmm. With the liberalization of the foreign exchange regime, I think to a large extent that has taken a step forward. And then regulatory as well, like the Startup Act that I think it's been approved in Parliament now, but to be rolled out is probably, we've been waiting for that for a while. There are little things like this. For example, in addition to those broad criteria laid out, investment readiness for us means that a company has to have a certain holding structure, a corporate holding structure. And this is true across most investments. Most investments will not invest in companies directly in, say, an African country, in Ethiopia. There's typically a holding structure in a jurisdiction that investors are comfortable with, both from a legal recourse, tax optimization perspective, and so forth. Places such as Delaware, okay, some Mauritius, sometimes the Netherlands, right? Investors invest in holding companies in those jurisdictions, and it's those holding companies that own the actual operating companies on the ground. So this is also not a common structure in Ethiopia, but it needs to be. It needs to be transparent. It needs to be widely accepted, and so there are still some obstacles, in the way of making it really easy to invest in Ethiopia. Even though we've come a long way, there's still a few of these.
Finally, what strategic advice would you provide to entrepreneurs who are in the process of establishing startup companies, particularly in terms of strengthening their operations and making their businesses to be attractive and investable to potential investors? And what steps should they take to enhance their readiness for funding and long-term growth in the current competitive market environment?
That's a really good question. Just be open-minded. Talk to people, whether it's your peers. There are many young Ethiopians that have this experience, whether they gained it outside or somehow against all odds, being here, they still gained that experience. And I know of examples. So talk to people, talk to investors. Don't be shy. Don't be shy of asking silly questions, of learning. Have a growth mindset, meaning you can figure it out. They don't teach this stuff in school, really. Maybe in some schools, maybe at business school level or something, but they don't teach this stuff. So just be curious, ask questions, don't be shy, and think deeply about what type of business you want to run. I think the biggest decision is, I want to grow a $1 billion business. I want my business to get to that stage. I want it to live beyond me. I want it to be around for 100 years. And if that's the type of ambition you have, then you're going to need investors, I would argue, largely. So begin engaging with them, expand your horizons, attend conferences, talk to people. That's really it. It's about learning, because we just don't have that experience again here.
Thank you so much, Adam. Yeah, it was a pleasure and truly an honor to have you as our guest today. We had a very insightful discussion. Thank you very much.
Thank you very much for having me.